You're watching Startup Central with me, Nayantara Rai. Our next guest is a co-founder of a startup that is now valued at over $5 billion. It is Phonepe. Why are we getting Phonepe on the show today? Because Phonepe has taken the lead in rolling out an ESOP program for all employees, an all-inclusive program for all full-time employees, whether they're in sales or in customer experience. It's something you don't see in the startup universe. For example, those in sales and customer experience are usually never given ESOPs. Guess the size of this ESOP program? $200 million. So I interviewed the co-founder Sameer Nigam a short while back. Here's that conversation.
I think the philosophy was as follows. We are a 5-year-old company. We've had a lot going for us. The industry we are in has been very fortunate during COVID. It's actually grown, whereas a lot of sectors got hurt really badly. And 5 years in, when we finally effected the partial spin-off, we are over a $5 billion worth company. And this growth would not have happened if every single employee of the company was contributing to their fullest potential, right? I mean, any startup that's gone through hockey sticks will tell you that it stresses everybody equally. Everyone has to go over and above. Everyone's pulling long nights. Everyone in the sales force at Phonepe was working through COVID. I mean, literally from the day the second lockdown ended, our offline sales team, every single person was back in the markets other than, I think, Bombay and Delhi. They were, again, sort of hitting the streets, acquiring merchants, servicing them, helping them get listed on our apps. So when we look at superlative effort coming from every individual in the company, and then we reflected on the ESOP policy, I think the management team felt, both of us founders felt that everyone should participate in the upside. There is no moral argument for having all of the equity be completely sort of lopsided and held only by 5 or 10% of the workforce. And ever since we started Phonepe, in fact, we've also never had any variable salaries or bonuses. We've always said that we want our employees to always keep company first, team second, individual third. And today at our scale, we feel that the best way to do this is to, in fact, bring everybody under the ESOP program. Otherwise, it's unfair because you're asking your frontline workers to take a different view, take a variable compensation view, be worried about whether they'll accrue value when the company grows. And we're very proud of this decision. I think it's the right one.
It's fantastic that you are rewarding employees for being there with you through literally thick and thin. I'm going to ask you a question. I'm not just asking you because I'm an employee, but I did think of it. Is it going to come at the expense of any increment?
No. In fact, when we had our first virtual town hall, this was, I think, on March 24th or 25th, as soon as the lockdown was announced, we'd made 2 promises at the org level. We told every single employee, we will not lay off because of COVID. We will write it out. Because, again, when we ask people to go above and beyond, no one's ever turned around and said, that's not my job, that's not my brief. So it's our job to take care of people. And we promised them there will be 0 salary cuts. We have not had any salary cuts. We've actually done increments on the annual cycle in July last year. We did mid-year corrections. We are paying people market and above. There's just too much value being created to have an argument to not put that in people's pockets. Why?
So if you're taking the lead in doing this, when you already pay above market, and now you're going to also offer ESOPs, are you not going to force others to take your lead? Because, it's a very competitive market as well. So if you're going to retain talent, everyone's going to say, hey, Phonepe is doing it. If the sales guy is going to say, why should I work for anyone other than Phonepe in this segment, in this sector?
Well, 2 things. If we have created another reason for people to want to stay on at Phonepe, then we are doing our jobs right, selfishly. But taking a broader perspective, I think it is time, like any other sector, whether it's the IT sector, telecom sector, there's sectors that actually have a great run. And I think the consumer internet ecosystem is having a great run. We're creating literally millions of jobs amongst all of us. And I think a more egalitarian approach to wealth creation and accumulation is the need of the hour, right? When we keep reading about all these income statistics or disparity statistics, the top 1% has more than 750 million and yada yada. I am a capitalist at heart. We want to create value. We want to create value for everyone, though. I don't want to see Flipkart ring the bell at an IPO a few years out, or Phonepe ring the bell at an IPO, and find that people who've been working at the company for years and years have not seen value creation.
Yeah.
To be fair, by the way, I think the first company, at least I saw and I worked at Flipkart, that really sort of moved the needle in terms of participation was Flip back in the day. So I think we learned from them. We just met and beaten by making it 100%.
So, ESOPs are, of course, the currency on the startup street, but ESOPs come in handy basically when there is an IPO. We know about Flipkart's ambitions as far as an IPO goes. Can I see this as a precursor to Phonepe's ambitions? I understand that maybe you wouldn't want to overcut the market and the intention may first be Flipkart, even though there has been a spin-off of sorts. What can you tell us about that? Is this a precursor?
So I think two things. As soon as the spin-off happens, there's a Phonepe stock, which is different. And if it's different, then that's the currency we're going to use to incentivize our employees. And you're right. I think an IPO is the primary vehicle by which you get liquidity or that's the primary vehicle by which we want to give liquidity to our employees. We've said this a long time ago. I think India's seen enough fantastic multi-billion-dollar exits or secondary liquidity events. The question mark in the global investor ecosystem is, will India deliver profitable startups that go all the way into the public world? We'd like to definitely be one of the first, if not the first. Whether Flipkart gets there first or we get there first, I think that's academic, right? I think what's more important is we do everything in our power to become a viable business that is attractive in the open market and use that as a way to create liquidity. So this is a necessary alignment of incentives. It doesn't mean that IPO is happening any sooner or later. No.
Have you hired bankers?
No.
No.
Given a choice, I'd rather just make sure that the market's clamoring for an IPO instead of us trying to find somebody to set a price.
So this is the first step to that, right? So we read it correctly. It is a precursor that you eventually IPO whichever part of the world it is in or whatever, and that's how the employees will therefore get rewarded.
See, I think I've said this in 2018 or 19. We'd like for this business to become profitable in a 5-year span. I think we're marching well along in that direction. We're growing really fast. I mean, we're now almost at 300 million users. We're a little over 275 million users. So I think a lot of good things have fallen into place. And I think it's the right time to incentivize people.
You got over 275 million users, a $5 billion valuation as well. What's next, Samir? Can I ask you this question as well? Because you're incentivizing employees, you're trying to attract the best talent.
I think you'll find us doing a bunch of things in terms of improving MSMEs' lives. I think that's the one big learning we had this year. So we had a front row seat into the COVID sort of impact on small businesses because we acquired and then we service all these merchants for payments. And when you see the volumes of payments contract very, very sharply, that V-shaped economy recovery, we've also seen a lot of MSMEs get completely displaced. We've seen business recovery be slow in certain segments. And we realized that we can do so much more in connecting these merchants to our consumers, helping them with growth solutions, helping them with CRM and marketing solutions, offering services to them. So I think we'll be doing a lot more on that axis. And between that, our expansion on financial services, carve a way to profitability. I think the next big milestone is sustainable profitability at scale. I wouldn't compromise growth for anything. India is too exciting a market. So growth comes first, but profitability is the next milestone.
How far are you from that? Can I ask you that? Is that a final question?
Closer than you'd imagine, further than I'll divulge.
You should be a politician.
I'm just learning. Anything I say is going to land me in trouble. So yeah, we are well on our way. I think we're doing all the right things. Let me put it that way. Structurally, we are well on our way.
That's Amir. I know you had promised to talk primarily about ESOPs, but since I hired you, I thought I'd use that opportunity in the beginning of the year to figure out what's next. So clearly, you're looking at an IPO, whenever that is, the road to profitability, which is further than you would want it to be, but it's closer than what it used to be in 2020, is the way you're saying it, and a continued focus as far as MSMEs goes.
Yeah, and I think it's further because it's not just payments today, right? We're investing into a lot of categories. We're the fastest growing insurtech company now in India. We're now a top 10 business app for merchants in India. All of these endeavors, all of these ambitions require a lot of capital investment, especially on the marketing side. So when I say we're structurally sound, our cost base is very well in control on the unit economics, but we're still investing, and we'll keep investing as we find avenues for growth.
With that, Sameer, I'd like to wish you all the very best. Thank you so much.
Thank you. Bye.